Hello, everyone, and thank you for joining us today. Today, you'll learn about how to run a promo with Financeit. My name is Doreen, and I'm the Learning and Development Specialist here at Financeit. And today's guest speaker is Andrew, Sales Manager at Financeit. He has a wealth of experience working with home improvement partner promos and will share some of his expertise today. Now, without any further ado, please welcome Andrew.
Well, we're here to talk about promotional programs. And so we'll kind of go through the when, the how, the why. Those are the most common questions our merchants will ask us about promotional programs. So I'll take you through some data. I'll walk you through some examples and then talk about the process and where you can learn more about these on your own through your Financeit portal towards the end. And then if anything doesn't get answered, feel free to reach out to your dedicated account manager for anything specific to this, as they will all see a copy of this presentation as well. Okay, so moving on to the next slide. Read through this and then talk to it a little bit. Your industry is competitive. Offering a promotional program can set you apart from the competition and give your customers the payment flexibility to purchase the rent-out project of their dreams. And so reading that, I think it's all pretty plain black and white in the sense that we know your industry is competitive. You do too. Financing is becoming more prevalent. More and more merchants are starting to utilize our services as well as our competitors. And so offering promotional programs can help you differentiate and also help you get on a level playing field as some of your other peers that are also in this space. We'll talk about usage in a little bit, but we've seen usage go up year over year, specifically with promotional programs. And that's pretty eye-opening. That tells us something. One, it tells us that more merchants are offering it. And two, it tells us that the consumer is reacting positively to it. So we'll talk a little bit about that. Promotions such as deferrals can give customers peace of mind to go ahead with necessary purchases, even when budgets are tight or times are uncertain. This rings very true right now, right? In some cases, your customers may be skeptical of making large purchase decisions right now. In other cases, your customers may have the money saved up. They may be able to go ahead with this and pay it all in one lump sum. The reality is that we don't know. We don't know the financial situation of our borrowers and our customers. And making assumptions isn't the right way to go about it either. I always hear people say, "Oh, my customers don't need financing." They're based on the area code that I service, people don't need financing. Unless you're in the checkbook, unless you're in their online bank account, we really don't know what's going on. And so don't make that assumption. Offering deferrals and financing in general consistently among all of your sales interactions with customers is really your gauge as to know whether or not this is something that resonates with your customers. And so if you've never offered it before and you claim your customers never ask, it's probably because they're not aware of it. So we'll talk about how to position it too, but leading and being consistent with this offer is so important to get the most out of this type of sales enablement tool. Our ask for everybody today is really simple. Try it. Give it a shot. Start the year off, start the busy season off, or what normally is the busy season, with some type of a promotional program. Offer it through the many marketing mediums or channels that you would use, such as flyers, radio, TV, online advertisements. We see more and more merchants incorporating financing into their advertisements, and we hear feedback from those merchants that say, we've got a lot of people calling in and asking about the promotional program that we're running, whether it's a deferral or an interest rate buy down. And that's exactly why you would offer something like this, is to get people's attention. A deferral right now is a huge, and it has been actually for the past couple of years, and we'll see that in a second, the data. It's something that customer making a purchase, maybe it's a furnace, maybe it's a new roof, new windows and doors, whatever it may be, knowing that they've got payment relief for the next 3 months, 6 months, 12 months, that goes a long way. That allows them to get what they need to get done now and then defer that payment to a later time when things settle down, hopefully. Let's jump into some statistics. Annual borrower survey. So this is from 2018. We unfortunately don't have the 2019 report ready. These are our borrowers, your customers, that we're asking these questions to. And so you can see here, one of the questions, how important was the deferral period, i.e. the specific length of time before scheduled payments would begin, to your decision to finance your purchase? How important was a deferral in your purchasing decision ultimately? On the right-hand side, you can see the breakdown. 42% of the people that were polled and responded said it was very important. 31% said somewhat important. What very important to me means is critical in the decision to move forward with that purchase or financing as a payment method. What somewhat important means to me is there were other factors, yes, but a deferral was certainly one of them. And what this ultimately tells you is that 73% of people, a deferral was an important part of their decision to either proceed with that product or service and to choose financing as the payment option. 7 out of 10 borrowers who were given a deferral said it was important in their decision. That's pretty powerful. Knowing that such a high percentage of people found this to be a very important component of their decision to move forward, if you were to apply a deferral or you were to offer a deferral consistently or advertise a deferral consistently, you wonder what that would do to your closing ratio. Moving on to another statistic here, home improvement promo program usage. This is really relevant as well. As you can see, in 2019, the usage of promotional programs across all loans that we funded in the home improvement space increased. It's now 43% of all loans that we fund have some sort of promotional program attached to them. I would not be surprised if at the end of 2020, the ratio is 50-50 or possibly more than 50% of all loans that we funded have a promotional program attached to them. And just to give you some context, so when I started in 2015, promo program usage was in the single digits of all our loans. Here we are 4.5, 5 years later-ish, it's now almost 50%. Merchants are starting to utilize promotional programs more effectively. Consumers are opting into these options. Consumers are looking for these types of options that are available to them in terms of financing and promotional programs. And it makes sense, right? The consumer is becoming more credit savvy. There's now all these different credit related companies, Borrowell, Credit Genie, et cetera, that give you access to free credit reports on a frequent basis. Historically, Canadians haven't had something like that unless they're calling into Equifax and paying to get a report. Now people are more aware of what their credit is and what their capacity to borrow is. So it makes sense that more people are opting into finance solutions now more than they had in the past. But this is really telling. Here are the most utilized promotional programs in 2019, our top 5. Roughly over 7,100 loans last year had a deferral, a 3-month, a 6-month, or a 12-month deferral attached to them. That's a lot of loans. Clearly, it is the most popular promotional program, and it makes sense. It's easy to understand for both you and your customer. It's very affordable. In some cases, the cost is only 1% to you, the business. And so it makes sense as to why this is offered a lot and why consumers take advantage of utilizing your services, and those who offer this so frequently is because people like a payment break. Rate buy down was the second most utilized option here at 8% of promotional programs. They went through on our interest rate buy down. We'll talk about that in more depth for those of you who are unaware of how it works. And then our 0% interest equal payment option came in at roughly 13%. And so you'll see here on the right-hand side, the rank in terms of total loans by each promotional program. 12-month equal pay, which is the 0% interest option, comes in on ranked 4th here. And then the 2.99% interest buy down for 36 months comes in at 5th. If you look over to the left, you'll see that interest rate buy downs are only used 13% versus the rate buy down at 28%. The reason that we only have one rate buy down showing in the top 5 here is because there are 18 rate buy downs to choose from. So usage is spread out across 18 different options. So this is the breakdown. So you can see sort of what's going on out there, right? A lot of merchants in the home improvement space are going with the deferrals. We're starting to see the interest rate buy downs, which are relatively new as of 2-3 years ago-ish, start to pick up steam. This is a breakdown of what all our loans go through on promotional programs for last year. So how to sell with promos or promotional programs. So there's 3 types. Talked about all of them a little bit. We're going into more depth now. But a promotional program, it's a great sales tool to help you break down large ticket project costs into affordable payments for your customers. This is also a great alternative to other often more expensive tactics like save the tax, as an example, or heavily discounting your product. It's interesting, I got a flyer in the mail maybe last week or the week before from a windows and doors company, and their promotional offer right now, they don't work with us. Their promotional offer right now is save the tax. In Ontario, that's a 13% cost to your business. We've got 16 promotional program offers that cost less than that. And so there are ways that your business can save money by utilizing these promotional programs that we'll talk about now. And they are our deferral, or 0% interest, and our interest rate buy down. Positioning promotional programs is really important too. And perhaps this might be the most important component of the presentation. The mindset piece is important because I think a lot of people have sort of this preconceived notion about financing as, you know, oh yes, it makes sense for my business to have access to a financing option, but I'm not going to be proactive with it. I'm going to let my customer tell me when they need it, or I'll wait until the end of the sales pitch when the customer is humming and hawing over whether to move forward and then introduce it. That doesn't work. It has to be upfront. It has to be what you lead with to give your customer that option so that they're aware of throughout that entire sales pitch that is a payment option. The other thing too, I think a lot of people look at is these promotional programs and they say, oh, there's a fee associated with it, so why would I do that? Well, why do you discount? That's costing your business money. Why are we offering promotional programs like Save the Tax? That's costing you 13%. It's no different in utilizing promotional programs, especially some that cost only 1%, right? It's changing the mindset to say, this is something that can help me sell more, help me reach out to more customers. And it's proof from our merchants that go from not using financing and not using promotional programs to advertising, whether it's online or flyers. They start getting people calling in and asking about the promotional program. Yeah, I'm calling in about the 3-month deferral. What products or services qualify for that? In most cases, it's all of them, which is great. Understanding your customer's situation, especially right now in times of financial uncertainty, promotions give your customers that financial flexibility to get their home improvement project completed when they need it. So we talked about deferrals and how right now those are especially relevant. Getting, you know, the project that they need to be completed, whether it's a furnace or a hole in their roof or windows are broken, or, you know, they just want to do some backyard maintenance or general repairs around the home. In some cases, they can't wait. In some cases, they can. But if you present them with an option that defers their payment for a specific period of time, it allows them to say, okay, I can actually get this thing done now and not have to worry about making payments until the future. And that goes a long way. And understanding kind of goes back to what I mentioned in the beginning, is when people have said in the past, oh, I know my customers don't need this. If they needed it, they would ask for it. And I service an affluent postal code or an affluent area. None of them would need financing. You don't know. We don't know those things for sure. And so making assumptions doesn't help. Understanding that potentially everyone would want to take advantage of this is probably a good mindset, and offering it consistently on every single sales interaction is the best practice in this case. So with advertising, which I've sort of touched on in a couple previous slides as well, is really key. And so this is how, especially right now in terms of online ads, radio ads, or flyers, things like that, where we're starting to see more and more activity, more and more merchants put these on their flyers, and so that the customer is aware up front, and hopefully they are calling in and saying, got this flyer, tell me more about your service, tell me more about this promotional program offering. Had an example from a merchant that we met with towards the end of last year, and they were talking about how when a customer calls in, the first question that gets asked is, have you heard about our current promotional program? In some cases, that promotional program is related to Financeit, and others it's not. It's not always a Financeit promotion. At that point in time, it was. And so they were letting the customer know right up front, there is a promotional program available. This is what it is. They know that before they've even sat down and talked about what the type of product or the service that they want or how much that's going to be, right? So advertising helps get people, helps drive leads through the door that are probably right now otherwise thinking, you know, this can wait. I'm not going to do it until I absolutely have to. A deferral may put them at ease, may allow them to do that project that they need to do right now instead of waiting. And then conversation. So it all kind of comes down to the conversation between your customer and your sales team. Waiting until the end of the sale, not a good tactic. Waiting until the customer asks you, not a good tactic. You're not utilizing Financeit in this partnership to its full potential if you're waiting for the customer to ask you for something that they probably don't know is available. And so talking about it up front, not asking you to be a financial expert, not asking you to sell someone on Financeit and make them believe in what we do, but presenting them us as a payment option is really all that you need to do. And if they are interested in learning more about that, or they're interested in taking you up on your offer, and they'll be the ones that guide that decision. They'll be the ones that say that, you know, tell me more about this. I'd like to move forward with the purchase through Financeit, whatever. So positioning it, changing our mindset, understanding the customer. Not everyone, we can't assume we know everything about that customer and what their financial needs are. Utilizing advertising channels to promote your business and financing together, and changing the conversation and having, you know, your sales reps and your team bring this up at the beginning of the conversation is what we've seen our most successful merchants do with Financeit. So we'll talk about deferrals here. A deferral is when you allow your customer to delay the start of their loan payment by a specific period of time, such as 3 or 6 months, giving them what some have called a payment vacation. So a deferral is ideal for scenarios when your customer is expecting to receive funds in the future or in times of temporary downturn. What we mean here by receive funds in the future is, in some instances, people will take a deferral. Let's say it's a 6-month deferral, because they know they're renewing their mortgage in the next, 6 to 8 months. And so once they renew their mortgage, they would wrap this loan up into it, as an example. We'd love if everyone took the full 10, 12, 15 years to repay their loan, but we know that's not a reality. And a lot of people do this because our loans are open. That's totally a possibility for your customer. Deferrals are very popular in the pool, spa, water treatment, HVAC, roofing and windows, and doors businesses. It's where we see the most usage of this promotional program. Many of our partners do offer this year-round. It's not just a special time of year type promo. It's consistently being communicated out to their consumer base that it's an option. And as I mentioned before, we've got promotional programs for as low as 1% in terms of a cost. Our 3-month deferral costs you 1%, which is less than the cost of processing a credit card, which I know a lot of your customers love to use to pay. So how a deferral works. Again, one of the more simple programs to understand in terms of how it works. It's literally, if you think of payment vacation, that's what it is. The customer doesn't make any payments, no interest accrues for a specific period of time. After that time expires, they begin to make repayments on their loan as agreed. So if you look at a deferral program and how financing in a deferral program combined would work with a $10,000 hot tub, you got a $10,000 purchase on a credit card, payment for the customer is due in 30 days or interest is accrued. Merchant fee to you is 2 to 3% depending on the credit card. So your approximate cost as a business, anywhere from $200 to $300 on average, and your customer is paying an interest rate of 14.99%, which I'd say is fairly conservative, typically in that 20% range for most credit card companies. Versus purchasing that hot tub through the 3-month deferral program with Financeit. On our standard program, 8.99% interest, they're paying $103 a month. They've got a 90-day payment break before they have to make that first $103 a month payment. The promo fee to your business is 0.99%, so 1%, which costs you $100. And the interest rate your customer has ranges anywhere from 8.99 to 11.99%, depending on their credit. So which option is better for your business? Obviously, the cheaper option. You're saving anywhere from $100 to $200 in terms of fees by leveraging the Financeit 3-month deferral program. Which option is better for your customer? That depends. You don't necessarily know what your customer is thinking off the bat. We know that customers like to pay with credit cards for points, but if you don't present them another payment option other than cash, check, or credit card, they won't know that something like a deferral is available to them. There's a variety of other reasons why a deferral or why a monthly payment would be really powerful too, is because perhaps their budget for that hot tub is $10,000. But when they see that monthly payment of $103 a month, they may say, well, I actually have enough wiggle room to get this thing up to $160 a month. In that case, their budget now just went from $10,000 to $15,000 because they can afford a $150 a month payment, which is roughly what a $15,000 hot tub purchase nets out to be on our program. So there's a variety of different reasons why this can help you sell more, how it can help you attract customers, and how it gives your customers more options from a payment standpoint. 0% interest. So a 0% interest or an equal pay promotional program is when your customer is not required to pay any interest on their loan over a period of time. We offer this promo program anywhere from 1 to 5 years, so 12 months to 60 months. 0% interest, it's an attractive option for customers who are interest rate sensitive and want to pay off their balance in a short period of time. Used primarily in the water treatment, roofing, HVAC, and spa businesses, that's where we see most usage. Can be offered year-round or during a slower time of the year to boost the lead funnel. Used mostly for projects under $10,000. You'll see in the example I'm about to go through why, as the monthly payment can get pretty high if you're going over that $10,000 mark. And the 0% interest over 12 and 24 months are by far our most popular options, primarily because of the cost to you, the merchant. And if we look here at this example, so in this example, we're doing a $6,000 furnace replacement. Our regular program of 8.99% financing is on the left-hand side. 5-year term and amortization comes out to $126 per month for the customer. Over that 5 years, the customer would pay $1,582, $83 if you round up in interest. No fee to you to utilize that program. Now, if you were to offer a 0% for that same $6,000 furnace on our 12-month equal pay program, the customer's loan is paid off in a year. Their monthly payment is, again, rounding up, $508 a month, so reasonable. Interest accrued for that customer is 0, so they've saved, almost $1,600. The cost for your business to utilize this promotional program is 5%. And then if you look at the 0% for 24 months, loans paid off by the customer in 2 years, their monthly payment's $254, interest accrued 0. And the fee to utilize this is 9% to you, the merchant. So there's pros and cons to every single promotional program that we have available to you. It all really depends on your business, what you think is going to work with your customer base. But we do find that the 0% interest is really effective on, ticket job sizes or ticket sizes, whatever you want to call it, under 10,000. And it is very attractive for people who are interest rate sensitive. And the savings is really apparent. I mean, if you were to show a customer, these 3 options, and they could see the difference between going on the regular program and the 0%, of course, more often than not, they're going to, choose the 0% option. But thinking about it from a lead perspective, perhaps some people are looking for those 0% equal payment options to replace their furnace or to purchase their hot tub, right? It can be very effective. And again, you don't know until you try it. You don't know until you advertise it, until you talk about it with your customers. Because up until this point, many of you haven't offered it. And so therefore, not sure what the feedback may be. Going into buy downs. So a buy down is when you reduce or buy down the interest rate that you present to your customer. Our interest rates can go as low as 2.99%. And so really relevant in, well, really since 2009, when interest rates have been all-time lows, right? We've seen the bank prime sort of run up in and around sort of the 2.9 to 3.9 mark over the last couple of months. It's just dropped as a result of what's going on. And so being able to offer your customers interest rates that are competitive, or in some cases lower than what a bank might be offering them, that's powerful. We see the 2.99% buy down and all the other buy down options utilized most for our larger projects, where a lower interest rate really has a noticeable impact on the monthly payment. We see a lot of usage in basement renovation, window and door replacements, kitchen and bathroom remodeling, and other major renovations. It's best presented as an alternative to a product/project discount, as those can be quite costly and have quite a big impact on your margin compared to what the cost of an interest rate buy down would be. Again, this is something that we see offered in some cases year round. We do see special use of this for higher end products or services that are being offered as compared to, whatever their standard offering is. The average loan size data suggests that project finance with the buy down exceed the average project cost from that merchant. That's true. Touched on that towards the beginning of the presentation. And the 2.99% 36-month buy down is by far the most popular option. And so we'll go into a example of how the buy down works. And so in the first two examples, you can see what the estimated cost is and what the monthly payment is based on our 8.99% program. You've got a $1,200 increase in cost, and yet your monthly payment only goes up by $2 because you've given them a 6.99% interest rate that's cost you 4% to offer that customer. Pretty attractive option, $77 per month for the top end unit that you are offering your customer in this scenario. Right? Only $9 more a month than what you would be getting on our standard program. So this gives you can hopefully see the power of offering a 6.99% rate buy down, or any rate buy down, what it can do to that monthly payment. And you're also going to be moving one of your more expensive units. The interest rate buy downs are really effective. We see them used a lot, like we said, in those specific categories. They work really for anybody. There's a lot of power when you can give someone the good, better, best option, and the monthly payments are so similar across the board because you're leveraging interest rate buy downs. Not only that, a 6.99% interest rate is not bad for an unsecured loan, probably on par, if not a little bit lower than what you'd receive from a bank. Utilizing buy downs versus just straight up discounting a customer or a project. So if you look at a $500 discount you're giving your customer on a $10,000 purchase, that's 5% cost to you. If you're offering your customer a 6.99% interest rate, that costs you 4%. So instead of giving a cash discount to a customer, offering them a 6.99% interest rate buy down, not only will it lower their monthly payment compared to what it would be on a regular program, but it's also costing you less. And that's important. So at a 6.99 buy down, you see here, it costs you 4% to leverage. Your customer pays $91 a month versus a 5% discount costing you $500 and your customer paying $103 a month. You win and your customer wins in this scenario by opting into an interest rate buy down instead of giving them a cash discount. And we've heard cash discounts can quickly escalate well beyond 5% of the total cost. A buy down versus the save the tax. And as I mentioned, the save the tax is still a very popular option out there. And it costs, depending on the province, 13%. So in this example, we've got, again, a $10,000 purchase that's costing you 13%. Your customer pays $103 on our standard program. Offering your customer a 3.99 interest rate in this scenario costs you 9%, which is less than the 13 that you were offering on the save the tax, and your customer only pays $75 a month. That's pretty powerful. Giving your customer, having a $10,000 purchase or something that's going to cost them $75 per month. $75 per month fits in everyone's budget. That's probably less than what a lot of people are paying for all their subscription services right now that they're watching on TV, Netflix, Disney Plus, all that other stuff, right? $75 a month is very reasonable for a $10,000 purchase. And depending on that type of purchase, especially if it's a want versus a need, justifying $75 to your spouse is not difficult. Thinking of a hot tub purchase as an example, right? So in some cases, these promotional programs can save you money compared to what we've seen traditionally being offered out there or done out there. And it also goes a long way with your customer from a monthly payment standpoint. If your customer came, another example, just thinking about it, if your customer said, I have a monthly budget of $150 and they're on our standard program, and you're, $10, $15 over that per month, you could leverage an interest rate buy down, keep that sale, and get them under whatever that acceptable monthly payment number is. And it would really only, cost you in some cases 4%, slightly more depending on the interest rate that you would have to choose. Not a bad cost to keep a job. So to sum it all up, in terms of financing best practices, or as the title states, keys to using a Financeit promo successfully, consistency is the most important thing. Not picking and choosing who you would offer this to. Every single customer, every single lead gets the same information as the other. I hear all the time people say, oh, I've gone into their house, it was a really nice house, and they had 2 Mercedes in the driveway, and so that's not the type of person that needs financing. Again, you don't know that. Those are all probably finance purchases anyway, so they're very familiar with the concept. You don't know what their financial situation would be. Leading with a monthly payment amount is another best practice, and including it on the product itself or in the quote, again, really effective tools. When it comes down to it and the customer sees a $15,000 price tag or a $150 a month price tag, right now, I think a lot of people are probably going to want to hold on to their cash and make that low monthly payment. Measuring your results. So a lot of what I've talked about today is feedback that I've gotten from merchants over the years. Unless you actually know and look at how your business is performing when you've started to offer these types of promotional programs, we don't actually know if they're working as a whole. We get feedback, positive feedback from merchants who say, hey, we're utilizing your promotional programs and we're seeing a lot of success with them. And then we start asking them some specifics, and they're like, well, we don't actually track any of this stuff, but we just, our sales are up. We're seeing more people calling and talk about it, and that's great. But I encourage you, to test these theories, test these best practices that we're talking about, and look at what you did pre and post offering financing. And then if a customer is interested in financing, because of the way that we've created our, this business model and the technology that we've built, you're able to do the application on the spot. No wait times, it's instant. For those of you who've used this, I'm sure you can attest to that. We're continuing to always develop the technology, make it better. Some tweaks are more noticeable than others. But doing the application on the spot is a powerful thing to say to you, look up at your customer and say, you're approved. Our approval rates sort of fluctuate in that 75 to 80% range on average, depending on the, sub-vertical within the home improvement space. Majority of the time, you're going to be giving that customer the good news, and that goes a long way. That helps them ultimately make their decision. And as go back to at the beginning of this presentation, we know that deferrals have a huge impact on whether or not a customer moves forward with a purchase. 7 out of 10 people say it impacted their decision to move forward. You have the ability to do these things on the spot and get instant responses from our system. Take advantage of that. Some of the current promos and where I can, and I know I'm tight for time here, so where you can find all of this, it's online. It's in the resources tab in your online Financeit portal. Another really strong suggestion for all of you, reach out to your account manager. Have conversation with them about this if there's any confusion or about where to find this information. But it's in your Financeit portal in the resources tab. There's a promotional program rate sheet specifically that outlines the promotional programs that are available and the costs associated with them. You can also leverage the payment calculator online as well. That will give you live feedback when you punch in a job cost and you add a promotional program to it. You can see exactly what a rate buy down would do to the monthly payment compared to our standard program, etc. So that's where you find all that information. In addition to that, just want to remind everyone we've got world-class customer support whenever you need it. And for more tips on boosting your sales via Financeit and leveraging the sales enablement tool, please contact your representative directly or someone on our customer service team.